For today class, we'll be discussing about PFRS 5, which governs your non-current assets held for sale and your discontinued operations. PFRS 5 is actually a short standard class when compared to the other standards. Throughout the discussion class, I'd like us to at least establish five basic concepts cons- concerning the standard. Number one, we should be able to know as to when will an asset be considered held for sale. Number two, the measurement when an asset is to be classified as held for sale. How should it be measured? Number three, how should it be presented? Should it be presented as a current asset or a non-current asset? Number four, how should the assets, especially if it comprises or it forms part of a disposal group, how should the assets and liabilities of a disposal group be presented? Number five, how should the results of the operations of a non-current asset held for sale be reported in the financial statements? So at the very least, we should be able to answer those questions, class. So for PFRS 5, we can actually split this into two, class. Okay, the first part would be the rules or the treatment provided by the standard as to non-current assets held for sale. The second part of the standard class would be as to the rule on how to report the discontinued operations. Now they are presented together, class, because normally, as the reason they are presented together is that the rules on non-current assets held for sale, class, would apply even if we're not just talking about one asset. So it's possible that we would think that when we are talking about non-current assets held for sale, we are talking only about a single asset. Okay, but the rules actually that are applicable for non-current assets held for sale is applicable also to a group of assets that we also intend to sell, that we are now just holding for while waiting for it to be sold. Okay, and if you have a group of assets, class, okay, and we can even the group could even have its own liabilities. If you have a group of assets, it's possible that they are able to generate their own revenues or cash, class. Okay, so you have a group of assets and working together, they are capable of generating revenue or cash just by themselves. But because we have already decided to sell them, class, in the immediate future, then this group of assets will stop earning or generating cash already. So to some extent, it now will be considered as a discontinued operation. And since it is now a discontinued operation, we will have to know how should we present the income and the revenues and the expenses that were earned and incurred by this group of assets. We cannot just join them together with all our other expenses and revenues, class, because they represent a separate kind of a separate component of the entity this time. They now represent a part of the entity that will eventually be disposed. There is a need to separate the results of the operations of a discontinued operation, class, so that the financial statement users will not be misled that the income or profit presented in our financial statements would also be the same income or profit that will be earned the subsequent year. To clarify my point, let's say we have 10 components, class. Our business have 10 components. We've decided to sell one component of the entity. Okay, and the component that we are trying to sell, class, earns around 30%. Okay, it represents 30% of the total profit of the entity. We have 10 components. We want to sell one component, and the component that we want to sell actually generates 30% of the total profit of the entity. So if you will not separate the operations class of this discontinued operation, if you will not separate the contributions of this component that will eventually be sold class, then the financial statement users would be thinking that if we report 10 million profit today, then the expected profit in the coming years would be somewhat close to that amount also. But in reality, the earning profit of the remaining entity is significantly reduced because of the disposal of one component, the component that earns 30% of our total profit. So there's a need for accounting standards class to come up with a separate rule for discontinued operations. Okay. But again, as to the reason why they are discussed together, why the rules for assets held for sale and discontinued operations are discussed together, it's because discontinued operations would be a necessary consequence for reclassifying certain disposal groups as being held for sale class. It's a result of the reclassification of your assets into a disposal group. Okay, I hope you're able to understand that if you are now intending to sell a group of assets class, if you are intending to let go a group of assets, then the profit and including the expenses class that were supposedly generated by this group of assets would cease to exist the subsequent periods. Okay, and I have already mentioned why it's important to separate the results from the discontinued operations from the results of your continuing operations. I do not expect there to be a question as to the objectives of PFRS 5 class. Okay. Now, if we go to paragraph 4 class, the first sentence here will actually give us our definition for a disposal group class. Okay, sometimes an entity disposes of a group of assets, possibly with some directly associated liabilities, together in a single transaction. Okay, so this now gives us, although indirectly class, the accepted definition for a disposal group. A disposal group is a group of assets, possibly with some directly associated liabilities, that are expected to be disposed together in a single transaction. Okay. Now, the standard further tells us class that the group may include assets and liabilities of the entity, any asset or liability of the entity, including current assets or current liabilities. So, when we are talking now of a disposal group class, this is no longer just limited to non-current assets. So, as long the grouping here class would mostly be based on their ability to produce cash class, their ability to generate cash by themselves. If it is part of a group that is capable of producing independent uh, sources of cash class, then they should be grouped together. And if you have decided to dispose of the entire group, then all the assets forming part of that group, whether or not it is a current asset or non-current asset, should be included in the grouping. Paragraph 4 also tells us class that your non-current assets class held for sale and your disposal group are to be measured at the lower of its carrying amount and the fair value less cost to sell. So this is one of the things I wanted us to take away from today's discussion, which is the measurement of your non-current assets held for sale. Okay, and they are to be measured class at the lower of its carrying amount and fair value less cost to sell. So what does this mean? Okay, let's try to imagine first a single asset lang class. Okay, we have a building class, which is supposedly a non-current asset. Okay, but however, we have decided that we will no longer use this in the operations of the business. We will no longer use this for whether for administrative purposes, whether for production, or whether for supply of goods or services. We've decided to sell this building. Okay. As a result of that intention class, there will now be a need to reclassify this building. When it was still used in the operations class, the building would have been classified as part of our PPE. But if our intention now is to sell this building class, if we intend to recover the value of the building by selling it class, if we intend to benefit from the building through the proceeds of its sale and no longer from continually using the asset, then the asset should be reclassified. Instead of being part of your PPE, it should now be reclassified as a non-current asset held for sale. And the measurement rule class, the moment that you reclassify a non-current asset as being held for sale, it should now be measured at the lower of its carrying amount and its fair value less cost to sell. So you look at its carrying amount while it was still a PPE class, and you look at its fair value less cost to sell at the date of reclassification, then whichever is the lower between the two will now be the carrying amount of the asset as an asset that is held for sale. So from PPE, it will be classified as held for sale. While it was still an item of PPE class, assuming the cost model is used, then its carrying amount is its historical cost less all the accumulated depreciation or impairment. Okay, so you compare whatever carrying amount appears for that asset class at the date of reclassification, while it was still an item of PPE. You compare it with the expected selling price. Okay, although technically the standard tells us to use the fair value less cost to sell. You compare it with the expected selling price, the amount you expect to recover from the asset, and whichever is lower, that will now be the new carrying amount of the asset, but no longer as an item of PPE, already as an asset held for sale. Okay? But again, simplest takeaway class. If you are asked how are non-current assets held for sale measured, they are to be measured at the lower of its carrying amount and the fair value less cost to sell.